Thank you so much for joining us today, whether you're here in person, online right now, or joining us a little bit later online. Thank you so much for being here. We really appreciate you. My name is Soka Yus, and I am a financial wellness counselor here at Mayo Employee Federal Credit Union. Today's topic, we're going to talk about just general financial wellness. So this is my contact information. If you can't write this down now, you can always go to our website, mayocreditunion.org, and you can go to the financial education tab, and my contact information will be on there. And today we're going to go ahead and talk about budgeting, saving, managing debt and credit, student loans, retirement financial planning. Just touch base a little bit on that, managing your money and watching out for scams. And stay tuned for after this presentation. Stephanie's going to give a presentation on scams. She's from the fraud department, so she gives some really good presentations. So stay tuned for that. So when it comes to budgeting, it's really important that you set a budget and be realistic about it, right? So sometimes when we talk about the word budgeting, it's kind of a taboo topic, and it gives certain people, anxiety and stuff when I bring up the word budget. But a lot of times when we think of budget, we think of something that restricts us from what we want. And I kind of want to change that for a lot of people. Just think of a budget as a way of tracking your spending habits and your daily expenses. So it kind of, in a way, gives you a freedom of knowing how much you have available to spend on life, how much you have available to spend on vacation, how much you have available to spend on bills. So it's just more of a freedom to with your finances when you think about budget. The first step in starting a budget is, of course, auditing your accounts, right? Because we can't really make a map to go somewhere where we want to be unless you figure out where you start where step one is at. So step one with budgeting is always auditing your account. That's not fun, it's not sexy in any way, but it's absolutely necessary to figure out where your starting point is at. So the best way to audit your account is to go ahead and look over your past bank statements, your credit card statements, and kind of look over, where are all my spending going to? Am I spending too much money in Starbucks? Am I spending too much money at Macy's? Or where is it, all going to? Or is it all going to subscriptions that you're not really aware of? So when you are auditing your accounts, you realize, you know what, I haven't used this. I don't know why I still have a subscription to certain things. I just need to go ahead and cancel it since I don't use it anymore. So when you're auditing your account, you'll really kind of figure out your spending patterns, your spending habits, where you need to cut out money, things like that. But if you have a hard time auditing your accounts, I'll be more than happy to help you with that too. So a lot of people just kind of bring in their statements and say, you know what, it's just, 30% of your finances your income is going towards eating out. Maybe this is something we need to put a cap on. If you want to reach your goal of traveling to, Italy in September and you don't really have anything saved now, why don't we just, take a look at your expenses, see where all your money is going to, so that way we know what to cut out. So that's, how we start auditing accounts. We of course want you to build healthy habits, right? So when it comes to budgeting, it's mainly just, a habit. So it's one of those things that you have to start building healthy habits. You want to establish and understand your credit as part of your healthy habits. And of course, we want you to make all your payments on time. You want to start building a savings account too. The best way to do that is to automate all your savings from your paycheck directly to a savings account, preferably one that's not with your main checking account, something that's a little bit harder for you to get to unless it's an emergency. So if you you're one of those that find yourself having a hard time saving money, perhaps just automating it directly from your paycheck would be the way to go. With Mayo and with here too at MEFCU, you can just have HR deposit like 25% of your income or a certain amount, let's say $200 a month, $200 per paycheck, directly to that separate savings account, and then have the rest of your money go into your main checking account. That way you eliminate yourself as the middleman. You eliminate yourself from having to transfer that manually. And then, ultimately talking yourself out of transferring the savings. So we want to avoid that. And of course, when it comes to budgeting, we want you to set financial goals, right? So it's really important to try to figure out what kind of goals you're looking at, whether it's something minor, I want to save $1,000 by July, or it's something more like I want to go to, Amsterdam in December. That can be a short-term goal, something less than a year. or perhaps, start an emergency savings fund, savings account. So that's always a good goal to have too. Or if you're one of those that's, moving more towards a medium-term goal, about 2 to 3 years from now, you want to save money for a down payment on a house, perhaps pay off your car or pay off your student loans, wherever you're at in your debt repayment journey. That can be part of your medium-term goals as well. Or if you're looking more long-term goals, think about several years, several decades in advance, ahead of you. It doesn't matter if you're 20 or 40 or 60. Where do you want to be, in a few years, in about 20, 30 years? Where do you want to be when you retire? How much money do you have to set aside now in order for you to reach those retirement goals? By the time you want to retire, do you want to retire at 62, 65, 67, 70 or 80, depending on where it's at? Is your long-term goal to pay off your mortgage? Is that going to be more like a 10, 15-year goal, 30-year goal? And saving for kids' college tuition, that's a long-term goal as well. Do you want to start your 529 now, your kids' college savings account? Do you want to start that now, or do you want to start when they're like 5 or 6 or 7? It's always best to start as early as possible. So it's really, really important when we talk about budgeting that you figure out where your account is sitting at. So audit all your accounts, figure out where your starting point is at, figure out what kind of habits do you have. Do you have a healthy relationship with your finances? Is this something that you need to address with a financial wellness counselor to help you figure out your chronic spending or your spontaneous spending? Is this something that you do when you're upset or depressed, this spending money or buying new things to help you feel better? Is there a different way to cope with those feelings? So while you're auditing your accounts, you really figure out, what your relationship with money is. And then you want to set your goals, so then go over each goal with me or with your budget partner and try to figure out how much you need to save for those goals. When it comes to budgeting, there's so many good budgeting apps out there. There's also a lot of good budgeting templates out there. This is just one that we use here at the credit union. It's available if you guys need it. So when it comes to budgeting, it's just stick to the basics, something really basic, right? So you want to take a look at your income. How much income is coming in? Is it your income, your spouse's income? Is there another job that you guys are working? What other incomes are coming in? What is the total income that hits your account for the household, right? And then you want to list off all of your expenses. So that's your fixed expenses, things like your mortgage or your rent that's due about the same time each month, the same amount each month, or your electricity, your car payment, your student loans, things like that. Those are your fixed expenses. I like to have you list them all in order. So based on due dates, right? So due dates from the 1st to the 31st or whenever towards the end of the month. And then just kind of, so that we can see exactly when things are due, what is due, and how much the amount is. And then we want to move into your variable expenses too. Things are like groceries, household items, eating out, things like that, hobbies. Now, these are things that change it from season to season. There can be, summertime might be a little bit more expensive for you guys because you're traveling with the kids. The kids are not in school, or they have camps and stuff that might be expensive. And then going into the school year when things might be, a different kind of expense also, where there's sports, there's, gymnastics or play, whatever it is, travel. So things are going to change from season to season. So you want to adjust your variable expenses accordingly, according to your lifestyle. Just because you set this amount, that doesn't mean it has to stay at this amount. It's variable for a reason, right? So some months you're going to eat out a little bit more than others. But we still want to put a cap on it, right? So we want to say, it's going to be a really busy month. So maybe we're going to eat out a little bit more because we're going to be on the road a lot, right? So in the next month so for the month that you're eating out a lot, you might want to lower your grocery bill a little bit more too, because if you're lowering your grocery bill, if you're eating out more, then chances are you're not really cooking that much. So you might want to lower your grocery bill, or you might want to increase your gas bill a little bit more too and say, we're going to budget a little bit extra for gas this month. And we're not really going to put anything towards camp this month, right? So because that's just how our season is right now. But we still want to put a cap on those things so that way we know how to budget for it. But we want to be realistic, and to be realistic about your budget, that goes right back to auditing your account, figuring out where life, how much you've been spending on things the last few months. And of course, I would like to have people put in their savings and sinking funds expenses as part of their bills, right? Because if you are not forcing yourself, if you're not saving money, then for a lot of people, it's very difficult to save money. So just list it as some of your regular bills. You know, for Christmas fund, you want to save $205 each month. Let's just go ahead and every single month you have to pay that account. You have to pay that savings account that goes towards your Christmas account. And then every month you have to pay your house maintenance account, right? So it just goes directly into a savings account. If you're with an institution that allows you to have multiple savings accounts without having extra fees, then that's wonderful. Open up as much savings account as you want. Have different sinking funds accounts and have each one categorized and each one have a goal. Each amount goes into that account per paycheck, just so you can reach your goals. Here at MEFCU, we don't charge any extra fees for having those extra savings account or checking account, so you might want to look into that. If you're with an institution that charges you fees, then you might want to shop around for different institutions that won't charge you for those fees. So I like to do the zero-based budget, so that way you know exactly where every dollar is going to. So at the end here, it shows the amount left over is $0, which technically is true, but you have every dollar that's coming to your account allocated towards a job, whether it's $1,800 of that dollar is going towards your mortgage, or $205 is going towards your Christmas fund. Every single dollar has a job to do. So really, you're not really left with $0 because you have things allocated or amount allocated for different parts of life. Ideas to reduce expenses. I think we can all get a little bit creative with this, right? But one of the things is changing cell phone plans or even your car insurance too. You can shop around for those things, right? There's a lot of different companies, which means more competition, which means cheaper for consumers. You cancel your gym membership if you're not using it. Be a little bit honest with yourself. I've been to the gym in a few months. Maybe I just need to cancel my gym membership and kind of take advantage of, the outside weather and just walk around a little bit. Cutting streaming services and consider other internet providers. Now, cutting streaming services, we don't realize how many streaming services we currently have sometimes, because it's either like $5.99 for Peacock or $7.99 for YouTube or something else. But when you're auditing your accounts, you're like, you know what? I haven't used YouTube Sports in a while because I only use it to watch football. Football season's over, so I don't need to pay $89 a month for YouTube Sports anymore, or Hulu Sports anymore. So you can cut that out. You can, take a look at when you're auditing, see how many streaming services you have, how many different subscriptions you have, and cancel those. And if your institution is charging you fees to have extra accounts in there or to have a certain amount, minimum balance in your account, then you might as well just move it to a different institution that's not charging you. You can also refinance your loans, your vehicle loans, your student loans, even your mortgage, if your interest is higher. And if the interest is lower now, your credit is a lot better now, you can always refinance your loan and try to get a lower interest rate. So when you do get a lower interest rate, it means that your monthly payments will be lower. And that means that you have more money in your pocket to put towards other financial goals. So it's really important that you tailor your goals according to your current lifestyle and the lifestyle that you want in about 6 months, in about 2 years, or about 50 years. Okay, something to really think about. And savings, it's important to have different savings goals, as we discussed before. We want to have your emergency savings. It's important to have, right? So when you have your emergency savings and something comes up, like an emergency when you need new tires and stuff, you don't have to put it on a credit card. You don't have to put yourself further into debt. You can just use your emergency savings fund towards that debt. So that way you can avoid going further into debt and, really avoid a lot of anxiety too. We, of course, want you to set your goals to automate your savings from each paycheck. It's always best to have between 6 to 9 months of living expenses in a high-yield savings account or a money market account for emergency savings in case anything happens, okay? Again, talking about short-term, medium-term, and long-term goals as well. So it's really, really important to really sit down, be realistic with yourself. Where do I want to be? Am I going to have another child here in about 5 years? Am I going to be done with school in 5 years? Or am I looking at retirement in about 5 years? Or am I 20 years? Do I want to stay here in the States, or do I want to go back to, move to a different country where the living expenses are a lot cheaper? Where do you want to retire? Where do you see yourself? Ideas to accumulate more savings, of course, setting goals, automate your savings, meal plan, and dining out less. We know things, eating out is getting more and more expensive. What I like to do is remove all payments from websites like Amazon's and Target and stuff, so that way you can avoid just that one click buy. If you have a problem with just buying things, spur of the moment, not really thinking about it, just take off all those cards, remove, unsubscribe to certain emails. The emails that are sending you all these promotional things that are so tempting. With Memorial Day coming up, you're going to be bombarded with a lot of different, advertisement and stuff in different emails. So if you find yourself kind of really being a little weak with that, just go ahead and remove yourself from their list. The Gmail makes it really easy to unsubscribe to things, so that way you're not tempted. And then add another gig if you're able to. Pick up a part-time job if you're able to. If we're in a gig economy, you can download an app and, you can deliver food or whatever it is, right? So if you need that actual extra funds to go ahead and put towards your savings or to put towards your debt, just go ahead and get another job if you're able to, Ways to save that we have available here, or other places. We have high yield savings account, which is a money market account with credit unions. You can have CDs, so you have youth and teen CDs and regular CDs that we have available too. We have an educational account, which is a 529 plan for your kids, for your grandkids, which is wonderful because you can start investing now and you can continuously add money to it, or, when it's their birthday, if someone, don't want to get them toys or what have you, you can just ask them to contribute towards their 529 plan. And the beautiful thing about it is if your kids don't end up using it, they can always roll over a portion of it to their retirement account, like a Roth IRA. Or if they don't want to do that, they can leave the money in their account to pass it on to their kids when they have kids too. And you can still contribute until, there's no time limit as to how long you can contribute it to. So even if the kid is, your child is 30 years old, you can still contribute up to their, at 30, 40, or 50, however old they are. So that's a beautiful thing about the 529 plan. As we know, school is not cheap, college is not cheap whatsoever. So the sooner you start a 529 plan, the more that you'll give it time to grow. And of course, we have the traditional Roth IRAs with us too. So if you find yourself needing to discuss this with someone, you can meet with our member services representative, or also with Cetera, our investment team, to discuss the traditional, the difference between the two. We also have pre-tax savings pre-tax savings and pensions with Mayo. If that's what you need to talk to someone about, we do have a team here for that too. So then, we can't talk about financial wellness without talking about debt and credit, right? It's really, really important to really have good credit, and it's really important that you understand that your credit profile is very specific to you. So you can be, you and your partner may have kind of the same accounts on your credit report, but your score might be a little higher than your partner's, and because it's different age and different spending patterns and stuff on your credit report might affect your credit score differently. So just know that your credit score is very specific to you. You want to make, of course, thoughtful and deliberate choices when you're spending on your credit card. There are some people that don't realize that they have to pay their credit card back. So it's something that that if you're spending on your credit card, you have to pay it back. And just know that even though the introductory rate might be 0%, just know that it's going to jump up, right? So just know that, is it going to jump up to 15% or 29% or 30%? So just be mindful and really understand your contract. Really understand how credit cards work. If you're paying the entire balance this month off, why are you still getting a finance fee? That's something we can call, the credit card company about too. Monitor your credit report at least once a year. During the pandemic, I know annualcreditreport.com allowed people to access their credit report every week because there was a lot of scams and things out there. But it's really important to monitor it at least once a year. Just go on to annualcreditreport.com. It's absolutely free. It's a secure website. It gives you all 3 credit bureaus. You can take a look at your Equifax, your Experian, and your TransUnion. It's important to look at all 3 because one may report a little bit sooner than the other. So you may have a fraud reporting on one but not on the other 2, and it's really affecting your credit. Or you can just go ahead and lock your credit report up too. That's a free service to do. Just go on each individual website, Equifax, Experian, and TransUnion, and you can lock your credit as well. You can lock your Social Security number on Social Security Administration website, or you can just lock your credit report altogether. So if you have questions about that, I'll be more than happy to walk you through that. And of course, it's important to have good credit, right? So the better your credit, the higher the lower your interest rate on loans and things like that. But also, credit really affects so many other things in life besides loans, right? It affects, if you get into an apartment, it affects how you, if you get hired at a job, or, your car insurance. The second thing they look at after your driving history is actually your credit report. How responsible are you with finances, to kind of take a look at that too. So again, going back to kind of, when you're auditing your account, you realize you're paying a little too much on your credit, on your car insurance. And if your credit is better now, you're a little bit older now, you don't really have any, like your driving history is clear, you might want to call your car insurance company and see if you can negotiate, a price. Can you rerun and see if I can get a lower premium? If not, then I can go with someone else and see if I can get a lower premium with them too. So I think it's really worth it. You can save hundreds of dollars each month just by switching your car insurance. I sound like that commercial, right? You're going to save hundreds of dollars each month. So it's really important just to kind of monitor your credit every year, at least once a year, to know exactly what's on there. If you see something that's fraudulent, if you see something that's inaccurate, then reach out to them. Let them know that the address is incorrect. Let them know that, you've never had that phone number and stuff. So, because, so many things are tied to a phone number. So just make sure that everything on there is correct. Credit cards, of course, it can be a very helpful financial tool when used responsibly. It's the fastest way to build up your credit score. It honestly is. When I tell, 18, 19-year-olds, how do I build my credit score? The fastest and easiest way is with a credit card, but also that's the fastest and easiest way to ruin your credit too. So just be very mindful. It's really important that you know what your relationship with spending and with finances is. Do you use that as a crutch when you're, needing to buy something to soothe your, emotions? What is the reason why you need to buy these things, So really understand why the purpose of you having a credit card. It's really easy to manage online, especially when it comes to fraud and everything too. You can earn a lot of rewards. We have a lot of good rewards here too. And of course, it varies by card to card. Create unnecessary debt if it's not paid in full, if you're not able to keep up with your payments too. So again, it's the fastest and easiest way to increase your credit score, but also the fastest and easiest way to ruin your credit too. So if you find yourself in this situation where you need help with your credit cards, if you need help just organizing, trying to figure out what kind of debt you have, how you can take care of your debt and move forward in life, then you're more than welcome to reach out to me or other financial wellness counselor here so that we can help you get on track too. And loans, so many different types of loans that we have available here, but also different loans that I want to talk about. We, of course, have student loans here too. So we have private student loans here. The rates are very competitive, so it's really good. So if you find yourself in that situation where you need to get student loans for yourself or for your kids, coming up here in this, in this school season or semester coming up here in fall and summer, please by all means reach out to us and talk to one of our loan officers. So as you know, student loans is one of those big debt that's holding a lot of adults back from buying their first house, buying their, starting their family, or buying their first vehicle. So it's really important to be really diligent and do your due diligence when you're researching private student loans versus federal student loans, okay, and see what's best for you and your kids or you and your family. And personal loans, if you need to get a personal loan to pay off whatever, you need a personal loan to perhaps, buy something for the house or whatever it is, we have that available here as well. But just make sure that you know exactly how you're going to pay this back, how it's going to fit in your budget. Vehicle loans, of course, we have a promotion going on right now here, but just be very careful when you're buying a vehicle loan too. That's one of those things that, the average new vehicle loan here in Olmsted County is $653 per month for a monthly payment. So if you find yourself in one of the situation where you're in the 600 range, you're kind of average where it's at, but that doesn't mean that it's good either. There was a time where car loans was $200-300 each month, and you can still get a new reliable vehicle for that amount. So if you need help trying to figure out, what is a good price for you, how to budget for what you currently have. Is it a good choice now? You can talk to one of us about that too. Of course, with mortgage and home equity loans, that's available here as well. So it's really important. I mean, is this the right time for you to get into a mortgage? What is it? What's your life going to be like the next 2 to 5 to 10 years? Is this where you plan on having your permanent home? Are you looking for your first home, or you're looking to upgrade to, your second house or third house or what have you? So just kind of take a look and shop around for the mortgage rates. It's Olmsted County is, as the price itself is going up along with everything else in the nation, but it's not. It's kind of steady. The mortgage rates are kind of steady, so it's really important. If you find yourself needing like a home equity loan against your current mortgage, you can talk to one of our loan officers about that too. Something that I really want people to be very careful about: payday loans and buy now, pay later loans. We don't have that here at the credit union, of course, because with payday loans, it's very dangerous to get into. So it's one of those where, I just need a couple $100s until my next paycheck. So you all go online and they offer you $500, and all you have to do is pay, half of it back on your next paycheck and the other half on your next paycheck after that. But what a lot of people are missing is that they charge you a really, really high interest rate. So it's not really $250 on your next paycheck that they're taking out of your bank account, but it's like $375 or something because of the fees and everything on top of that. It's actually illegal in 19 states in the US. And I think they're working really hard to, abandon in a lot of other states too. So you find yourself in this situation, just know you're not alone, and we can definitely, chit chat with you and help you try to get out of this payday loan cycle, because once you get in, it's really difficult to get out of. Because, if they're charging you $375 your next paycheck, then where's the rest of your money? Where are you going to, get the rest of your money? You can't really buy groceries or pay your car note or whatever bills are coming up. Buy now, pay laters are kind of, it's gained popularity in the last few years. And it's very dangerous if you're not using it correctly, or if you're kind of abusing it a little bit. So back in the day when we had, with Kmart, when we had layaway, you can purchase a product, and then each paycheck or whatever it is, you can put a little more towards it until it's paid off, and then you get the item, right? So now when you're checking out on Amazon and Target, they're offering Klarna. They're offering, the Klarnas of the world, other buy now, pay later, processing company that say all you have to do is pay $15 over 4 payments, and then that way you don't have to spend the $100 or the $50 today. So it's really enticing for a lot of people, right? It's really enticing. But imagine having 5, 6, 7, 8, 9 of these, right? And of course they say, in 2 weeks you only have to pay $15. But if you multiply that by 10 accounts, then it comes out on different days of, it's not directly going to come out on your paycheck or on your payday. So you're still going to have to juggle a lot of it too. So just be very careful with these. They are, charging interest, and if you fall behind or if you fail to pay it, they do report to the credit bureaus. Well, I think most of them report to the credit bureaus now, but before they weren't. So just be very careful with them too. So when it comes to credit score, 35%, what goes into your credit score is your payment history. Just like your driving history is the most important thing when it comes to car insurance. 30% of your credit score is amount owed. So you just want to keep it under 30% utilization. Let's say you have a balance or available credit of $10,000. You want to stay under $3,000 balance for that card. So that's credit utilization. So you want to spend as little as possible, but of course we want you to pay it off, the entire balance each month. 10% of your credit score is new credit. 15% of your credit score is your length of credit history. 10% is credit mix, okay? So that doesn't mean that if you have, with credit mix, even if you don't have a mixture of so many credits or, credit card, car loan, mortgage, student loans, we don't need you to go out and get those different loans. It doesn't matter. It's only 10% of your credit score. But the most important thing is that you have your credit card, you have your loan that you're able to pay back on time or pay back in full. That's more important than credit mixture. And then length of credit history is the average age of the oldest account and the newest account together. So just be very careful when you're going through like Kohl's or Home Depot when they're asking you to open a credit card so you can save 30%. That really, it's wonderful to, save that much money if that's, what you're going for. But just remember, when you're opening a new credit card, it really shortens the lifetime of your credit history, so it lowers your credit score quite a bit too. It'll eventually go back up, of course, as your credit age and everything. So it's really important that you don't apply for unnecessary credit if you don't need to. So that goes into, talking about new credit there. Of course, payment history, 35% of your credit score is counted towards from credit history. So it's important to pay your bills on time. So if you find yourself not able to pay your bills on time, or if you need a few extra days, it's really important that you just call your creditor, let them know, hey, you know what, I'm having, a hard time this month. I just miscalculated my funds. Is there any way that I can pay $20 towards my bill this month and I pay the rest of it next month? Will this affect my credit score? Are you going to report it as late? Are you going to report it as current because I am still paying something? Just let them know, if you need to do a deferment on your mortgage or car payment stuff, just call and let them know, as long as you let them know in advance and say, I'm just having a hard time. I was in collections for 16 years, so I really appreciate the people that call in ahead and just say, I can't do it. I don't know what happened. Just be honest. Just say, I miscalculated this month. I spent a little bit extra on my son's party or something, and I didn't realize that I only had this much left. I've been a good customer, I've been a good member. Can we move the payments to the end of the lifetime of the loan or something? So it's really important that you just let them know in advance. So of course, managing credit, we want to find out how much debt you have, right? You can go to annualcreditreport.com. A lot of people have access to Credit Karma. You can see your credit report on, say, American Express or Capital One. You can have access to all of that. But it's really important to just see all three, again, all three major credit bureaus on annualcreditreport.com. Again, it's free to log on and to save your credit report. So you just want to figure out how much debt you have. You can either start with, paying the debt avalanche system, where you pay the highest interest rate first and then you work your way down to the lowest interest rate, or you can do it the other way, where you do this debt snowball, where you pay the lowest balance first. So it doesn't matter what the interest rate is, you just pay the smallest balance first and then work your way up to the larger amount. The most important thing when it comes to debt repayment, of course, is creating a budget. Know in your budget spreadsheet, how we list off the savings. Go ahead and have a category in there for debt repayment. How much extra are you going to put towards your debt? How much, what kind of time frame? How will that affect it? Do you want to pay this off within a year? How much do you have to pour towards that extra within this year in order for you to pay the entire balance off? Or if you're having a hard time, do it on your own, you're more than welcome to reach out to us. We can work with you on that. Or you can reach out to consumer credit counseling too. But if you're in position to look for debt management, just remember there's a lot of scams out there with debt management company. So do your due diligence and do a lot of research on the company. Make sure it's legitimate before you sign with someone. When to ask for help, when you're realizing that you're in over your head, you've been trying at, treading water for a few months or even a couple years and you're really not getting anywhere. Perhaps you just need a second set of eyes on it to kind of figure out, what do you need to do? What is the next best step? Is the next best step to, try to get a loan to pay off all your credit cards, so that way you can only have one loan to pay? So is the loan the best option for you, or maybe refinancing a few loans that you currently have? Is that the best option, so you can get a lower interest rate too? So it's always good, to ask for help. Get a second set of eyes. Don't be ashamed of it. Don't be scared to chat with one of us about that. So when it comes to student loans, two different things, right? You can have federal student loans or private student loans. There are state student loans out there too, but sometimes they fall under federal student loans. So you want to know more in the current things on federal student loans, you can go to studentaid.gov. There's a lot of information on there. You can, and if you're one of those people that don't know who you owe your student loan to, because there's been a lot of changes, they keep selling it from one company to another. Like, who do I owe my student loans to? Again, access it on your credit report and go to annualcreditreport.com. Take a look and see who's on there. Is it Mohila? Is it Nelnet that's on there? Then you would reach out to them, directly if you need to talk about your student loans. It's different types of federal student loans. There's subsidized student loans, unsubsidized, and private student loans. Private, of course, we have private here available, but subsidized and unsubsidized are with federal student loans. And again, you can access it on student.gov to see what kind of loans you have. If you work for Mayo or if you work for any nonprofit organization that's a 501c3 organization like Mayo, other government entities, and other nonprofits, your loans might be eligible for forgiveness. It's called the Public Service Loan Forgiveness Program. So PSLF, you can take a look and chat with your HR and see if the account, if your employer is eligible. The requirement is that you just work 30 hours per week. That's considered full time for PSLF. You're on the correct repayment plan and your loan is eligible for it. So this is only available for federal student loans. If you have private student loans, you won't be eligible for the Public Service Loan Forgiveness Program. But if you need help with your student loans, just let me know too. And also just know that even if you work for a nonprofit, like let's say 2 years ago, and you're now in the private sector, even though you're no longer a nonprofit, those years that you worked in with the nonprofit might still be eligible for forgiveness. So it's really important to just still look it over and still apply for it and get your loan updated. So again, if you have any questions on this, just let me know and I'll be more than happy to help you out. So again, federal student loans, there's subsidized and unsubsidized, and you can, you can consolidate all of your subsidized loans into one loan, because you can have multiple loans when it comes to federal loans. You can have 10 subsidized loans, you can have 10 unsubsidized loans. You can consolidate those loans, that way you're not paying 10 accounts, you're only paying 1 or 2 accounts. So your 10 subsidized loans are now consolidated into one subsidized loan, and then your 10 unsubsidized loans are now consolidated to one unsubsidized loan. So that way you can just make those payments and this goes directly towards that account, and it's only one interest rate that you're dealing with instead of 10 different interest rates. And again, with private student loans, you can consolidate your federal loans into private student loans as well. But you cannot consolidate your private student loans into your federal student loans. So that's 2 different things. So if you have any questions about consolidating any private student loans or shopping around for interest rates and things like that, you're more than welcome to talk to our loan officer about that too. The pros of private consolidation: you manage fewer loans, you save more money on a lower interest rate, and improve cash flow for lower payments too. So, the lower the interest rate, the more money you have in your pocket. Or you can release your cosigner sooner. If you have your parents that co-sign for you when you were 18, 19, now you're, a lot older, you establish your own credit, you're now working your full-time job, you can also consolidate your private student loans and release your cosigner a lot sooner. The cons of consolidation: you forfeit your benefits provided with federal loans. So a few years ago when we had those federal forbearance, if you had, if you consolidate your loans to private student loans, you forfeit your federal, benefits, and you weren't eligible for that. So what happens if you can afford your student loans? You can just reach out to them. Reach out to your loan company. Reach out to student.gov. If you don't know who you owe your balance to, reach out to student.gov and they'll let you know who you owe your balance to. Reach out to them, let them know, I'm having financial hardship. What kind of forbearance or what kind of program should I be on? They'll be more than happy to help you with that. When it comes to retirement and financial planning, of course, first things first, we want to pay off your high interest debt as much as possible, because it's very difficult to save money for the future when you have a very high interest credit card, very high interest debt that you're dealing with. Of course, we want to talk about college savings. I have a 3-year-old. I have to think about that long-term savings goal for him. Life insurance, his life, I have a 3-year-old and I have to readjust my life insurance. Is it going to be enough to cover him for how many years? Do I need to get additional life insurance that I pay outside of my employer too, just so it can help him cover for all those years, that he needs to get himself through? Estate planning and trust is really important. It's not fun to talk about. It's not fun to think about. It's not fun to plan. It can be very expensive too. But if you're with Mayo, and if you are part of the ARAG program, ARAG, where it's an extra benefit where you can talk to an attorney for a very, very low fee, you can talk to them about, setting up a trust, setting up estate planning too. It's really important that you do that because it really helps avoid going through probate court afterwards. It really helps your family members, your living family members, having to determine what happens to you, what happens to your money, where things go, what to do with things, So that will be, it doesn't matter how old you are. I think it's really important to have estate planning and trust as early as possible. And also long-term care, when should we start paying for long-term care? I always use the example, my dad was in, a nursing home He had a stroke. He was in a nursing home, and it was like $12,000 a month. So, and he was still able to walk. Was able to ambulate on his own and everything. That was still $12,000 a month. So, if if something happens and you have to stay in the nursing home for a year, for 2 years, how much do you have in long-term insurance? What kind of insurance is going to cover that? Where's the extra money going to go to? Do you still need to pay a mortgage? You don't want to lose your home while you're still in a nursing home. So just kind of think about long-term care in that sense. Like everything's just getting so expensive, especially in the long-term sector. So if this is something that you need to talk to someone about, I think there's extra benefits with Mayo, where there's, I forgot the name of the company, but they do offer long-term care insurance as well. There's so many other long-term care insurance out there to shop around as also. And the guy that I talked to about it at Mayo told me you can start as young at 40. And I was like, well, I might as well just start. I should have started a few years ago then in that case. So, but I mean, the sooner you start, the younger you are, the cheaper it is to pay for long-term care. Yeah. So he's like, you don't want to wait too long. I was like, well, I guess not then. And then, of course, you want to, during retirement planning, you want to identify your retirement goals, your desired lifestyle. Again, where do you want to go? Do you want to go to, I'm from Cambodia. It's a lot cheaper to live out there. Do I want to go back there? Do I want to have a house here? Or where do I want to end up, when I retire? Or you can contribute to your employer sponsor plans, your 403B if you're with a nonprofit, or your 401k if you're with a for-profit company. Do you have a traditional or Roth IRA? That's something for you to talk about too. And understand different government benefits too. How much are you getting for your Social Security? You can access that now at any age if you've been working at socialsecurityadministration.com or ssa.gov. And you can kind of see how much you might be getting paid each month if you retire this month. And then also they have a chart where if I retire at 67, how much I'll get. If I retire at 70 or 62, how much I'll get, things like that. And understand what kind of insurance is available for you. Do you want to stay on the Mayo insurance when you're retired, or do you want to go ahead and get with Medicare, or what is eligible for you? So, but either way, we should start with saving for retirement as early as possible. So that way you have that time to compound the money. So kind of give you an idea, if you're trying to save $1 million by 65, if you had just paid $60 a month starting age 15 to 65, you only have to pay the $60 to get $1 million but by 65. So that's a total investment of $36,000. But if you're waiting till 45, if you have to invest $1,310 each month, for a total investment of $314,000 in order for you to reach $1 million. So on and so on. So the goal is to start as early as possible. 15 is a little not realistic, but so I wasn't investing at 15. I can guarantee you that much. All right, and then ways that we have to help manage your money. Keep tabs available on your money with us here 24/7. We have online banking, of course, mobile banking, mobile deposit, bill pay, Zelle person-to-person, open and apply accounts online. You can also chat with our members our representative online too. So many different ways here. And again, watching out for scams. So in 2023, there's $10 billion lost in scam. And I think in 2025, there is $14.9 billion lost in scam. So that's a huge increase. Everyone is eligible, can be a victim, right? And it can be someone that's 15, it can be someone that's 95, it doesn't matter. Anyone that has access to a phone, a computer, anyone that has a name and social security number can be victims. So just be very mindful. And if you find yourself on that end, it's okay to talk to one of us. There's no shame. Don't ever be ashamed to say, you know what, I was a victim of this scam. I don't know what I was thinking. Every time I talk to someone about this, and I knew better. I had this feeling that it was too good to be true. I knew I shouldn't have signed this or that, but I don't know why I did it anyways. That's a story for every victim. We always think that, we want to do the right thing, or we're trying to help someone, or we're trying to, just help ourselves by trying to get a loan online or something. It turns out that it's a total scam. So don't ever be ashamed if you find yourself in that side. Other common scams, phishing scams, gift card scams, and person-to-person can be arrived via text, email, phone, websites, and other methods. They're so clever these days, and it's constantly evolving, especially with AI. There's other scams where it can sound like my voice calling someone and asking for money, so grandma, grandpa, mom and dad, I was thrown in jail or whatever, can you transfer some money for bail? That's a common one too. So just be very careful about that. There's just so many. Stephanie's going to talk more about it too. So just a quick little snapshot in 2024, $12.5 billion reported loss. It should be more because people feel like, even if I lost just $50 in this scam, I feel like it's not enough to report, but I think everyone should report. The more people report, the more it shows that there's a need for for more programs to help recover, for victims to recover, so just an idea, the number of some of the top frauds are imposter frauds, online shopping, of course, business and job opportunities. I'm just looking for a second job. I'm going online to try to, get a second job so I can work online. You ended up falling for a fraud, and you end up, paying way more. Investment scams, of course, and internet services. So many different scams out there. Just keep an eye out for it. If you do have that feeling like it's too good to be true, like the old saying goes, if it's too good to be true, then it might be too good. So you might want to chat with someone about that. Again, if you have any questions, do we have any questions online or in here? So, okay, perfect. Again, my name is Soka Yus. I'm a financial wellness counselor here. So if you guys have any questions, just reach out to me later on. So thank you so much for joining us today. Have a great day.